Property Share launches 473 crore rupees IPO for second SM REIT scheme. PropShare Titania. Property Share Investment Trust has filed offer documents for its second SM REIT scheme, PropShare Titania, aiming to raise 473 crore rupees. The IPO opens on July 21st, 2025, with a price band of 10 rupees to 10.6 lakh per unit. The Grade A plus commercial asset in Thane is fully leased to top tenants and offers a projected yield of 9%. This is India's second SM REIT public issue under SEBI's new framework for mid-sized real estate assets. Report Bilkul Online.
Before we dive into the asset itself, let me quickly give a background of Property Share and myself. So, Property Share was founded in 2015. I started my career at Blackstone, the private equity fund. On the real estate side, we set up Blackstone's real estate business in Asia back in 2007. We were investing out of a $10.5 billion Rep 6 international fund. At the time, of course, the real estate investment landscape was very different at the time compared to today. There were many things that are allowed today which were not allowed at that time, including the fact that we could buy completed commercial properties until much later when the press note came into existence. But we built a significant portfolio at Blackstone at the time, invested in almost $3 million worth of assets, became the largest office landlord in India, and then we sort of petitioned SEBI for REIT regulations because our portfolio had become very large. We wanted to exit that portfolio through a REIT. REIT regulations were not existing in India at the moment. At that time, and then finally in 2014, SEBI came up with the regulations. 2019, the first IPO, which was the Embassy REIT, came on, and then followed by the Raheja REIT, and then the Brookfield REIT, and more recently the Nexus REIT. 3 out of these 4 were Blackstone REITs. I was part of the team that bought almost all of the assets in the Embassy REIT, Raheja, and so on. And then the next REIT that's coming up is also Blackstone REIT, which is the South Korea Blackstone portfolio. I left Blackstone in 2014 and started Property Share as a way to provide individual investors direct access to the same product, which is completed commercial real estate, because we felt like this was a great product, a hybrid product which gave you interest income in the form of rent as well as capital appreciation. So it was a sort of quasi-debt, quasi-equity product with returns in between debt and equity, and we wanted individual investors to directly be able to participate in this product. That's how we started Property Share. We were the founders of the industry. We became the largest players in the industry. And then SEBI sort of came to us and other players and said, look, what you guys are doing is great. You've securitized assets less than 500 crores. We'd like to put in a formal regulatory framework around it. So can you submit a consultation paper telling us how we can do that? So we did that. And after that, SEBI came up with their own consultation papers. And finally, in March of last year, they notified the small and medium REIT regulations, which is pretty much what the fractional ownership platforms like Property Share were doing, but in a more regulated, listed manner, which is more investor-friendly, with all the corporate governances, reporting, the fact that it's listed, and so on. So we were the first to apply for the license. We were the first to get it. We also launched the first scheme under this license called PropShare Platina in December of last year. And now we are preparing to launch the second scheme, which is PropShare Titania, which will open on Monday, the 21st of July. Right. This was the first listing, PropShare Platina, which we listed as a landmark listing, watershed moment in financial sort of history in India, the first small and medium REIT scheme was listed. Nowhere else in the world do you have something like a small and medium REIT. It's sort of a hybrid again between an AIF and a mutual fund, just like an AMC. The investment manager, which is probably share, can launch various schemes. Each scheme is either one or multiple assets, but less than 500 crores. So every investor is ring-fenced to only one particular asset. The investor can choose to invest in one, but not the other. Someone who's familiar with Bangalore would invest in this PropShare Platina, and someone more familiar with Mumbai, let's say, would invest in Titania and so on. So as an investment manager, we can list multiple schemes. Of course, we have a great track record over the last 10 years. We returned a lot of investor capital. Our board is completely independent. The regulations around corporate governance is the same for SM REITs and REITs. Apart from me and Hashim, we also have Benjamin Cassie, who's a private equity investor out of the UK, who's been investing in UK and European real estate for the last 18 years and has a keen interest of investing in Indian assets as well. He's been to India several times. He's also a member of our board. We've got Mr. JC Sharma, the ex-CEO of Shobha Limited, Rachna Dixit, who's ex-RBI for more than 30 years, and Ramakrishna Station, a career wealth manager and private banker with 20 plus years of experience. Right. In terms of the partners and advisors, of course, like I mentioned, Kotak is the sole lead manager for this issue. Cyril Amarjit Mangalas is the legal counsel. EY is our tax advisor. JLL has provided market data. All the title and real estate diligences have been done by Trilegal. Right. So let's now talk about the asset that we are here to talk about, which is PropShare Titania. This is a grade A plus office building in Thane in Mumbai. We are buying 6 floors for 473 crores. It's 100% occupied. It's a LEED Platinum certified building. There are 11 different tenancy agreements here, including 2 Fortune 500 MNCs. The great thing about the asset is that the previous owner, which is Godrej, has spent almost 15 crores in doing up the entire building, the facade, the landscaping, lobbies, etc., in order to get the Platinum LEED certification, which they've now got. But as you can see, a large amount of capital has been spent last year on refurbishing the lobbies, the facade, all of these landscape gardens, landscaping, the kiosks, the walkways, etc., have all been redone, making this sort of a wonderful place for employees to come and work. And before I go into why we like this asset, this asset has been in institutional ownership from the very beginning, and what that means is that it's been owned by institutional capital, first by New Vernon and then by Godrej. What that does to an asset is it maintains its quality. It ensures that the quality of the asset is high. In a strata sold building, for example, where there are multiple owners, the building usually starts depreciating after 3-4 years. And starts looking a bit tired, but when it's under institutional ownership, then the quality is sort of maintained. That's what is done even on the big REITs, which are institutionally owned by players like Brookfield, Blackstone, and so on. Now, coming to why we like the asset, I think we, because we are required to invest 5% of the issue size ourselves from our balance sheet. So for a 473 crore asset, we are investing almost 24 crores of our own capital into this asset along with investors. That's what the regulation says. The first thing we love about this asset is the yield. The yield is something that I don't think exists today in this market. It's 9% for a grade A building, and we negotiated this late last year, and therefore we did this much before the interest rates came down from RBI, and now all fixed coupon bearing instruments are trading much lower than 9%. Today, if you were to go and buy this asset, I don't think you would get it for less than 8, or rather more than 8%. So we are already sort of in the money here in some sense. It translates to a per square foot value of 10,700 or 800 rupees, which is also a great number for Thane. Thane residential trades at 15,000-16,000 rupees a square foot. So in that way, we are getting it at a really good price. Like I mentioned, it's a multi-tenanted building. The first PropShare Platina listing was a single tenant. There's always a single tenancy risk, although there as well we had multiple agreements with the same tenants. But here we have many different tenants and tenancy agreements, and therefore even if one tenant were to vacate, then we would still have rent from the other 10 tenants. Therefore, the chances of not getting rent for a long period of time is very, very low. The in-place rent in the office building, 74.8, is much lower than market. It's 10% lower than the money market. What that does is the tenant does not have any incentive to leave the office building for rent. Number one, because it is the cheapest building around. And second, in terms of supply, there's hardly any supply coming in the Thane market. There's only one office building by Hiranandani that's coming online, and that's already been released, the first phase, to another large tech company. And in terms of location, of course, you've got the metro almost 300 meters from the building, which is a big boon for employees working there. I'll talk a little bit about that a little later. It's 100% occupied, and it has all the sustainability credentials that investors look for today. So in terms of yield, like I mentioned, 42 crores of rent every year translates to 9% yield on 473 crores. So if you invest, let's say 10 lakhs, you get 90,000 rupees every year. In terms of the tenant base, like I was mentioning, Aditya Birla is 50% of the total income, and they've been here since 2015. Leases in Mumbai are typically 5 years, so this has been renewed by Aditya Birla in 2020, 2025. Again, Concentrix, again 2015, renewed in 2020, renewed in 2025. There's another Fortune 500 company which has been here since 9 years. All these tenants have been here for a very, very long time. In fact, if you just look at Aditya Birla, they've grown from 126,000 square feet in FY20 to almost 370,000 square feet in this office building alone, which is 3 times its square footage. And the reason they love this building, these are all BPO tenants, Concentrix, Aditya Birla campuses, and BPO back office. The reason they love this building is because if I want to have a back office in Mumbai, there are really only 2 options. I could either be in Thane at 75.8 rupees, or I could be in Navi Mumbai at 73.5 rupees. Navi Mumbai obviously is a much more inferior location because it's further down, doesn't have the catchment of residential that BPOs need, that Thane has. Thane has much better access to Eastern Mumbai, Central Mumbai, BKC, given the huge infrastructure initiatives that have been launched in Mumbai over the last 2 years, which we are now seeing coming to completion. But other than that, as soon as you move to the secondary business districts, you are paying 150 rupees, 160 rupees, double the rent. And therefore, Thane is in this unique position where the rents are low, there's a great catchment of tenants, and as well as sort of residential to tap into for the employers. And therefore, the vacancy in Thane is only 2.4%. The other reason that they love this location is, of course, this. The new metro is coming up here. It's supposed to be completed by the end of this year, but let's see, it comes the following year. You can see the bottom of the page. Here is the office building we're talking about. Here is the metro, and this is the green line that's going to connect Thane, completely to BKC all the way down to South Mumbai. Here is the metro station. It's right there, only 300 meters, and all these BPO employees, they're all coming in 2-wheelers. It's a very dense sort of office campus compared to the usual front office campuses in BKC, where there might be 400 square foot per person. Here we're talking about 70-80 square feet per person. So we're talking about a large volume of people moving in and out, engineers just passing out, so working in these BPO companies. Therefore, access to infrastructure, public infrastructure, metro is critical to them. And when that happens, the sort of stickiness of the tenant increases because the stickiness of the employees increase. Employees find it easier to travel to a tech park like this, and therefore they stay longer in these companies, which is the biggest problem for BPOs has been attrition over the last 15, 20 years. And once this metro comes online, we've seen that in Bangalore, we've seen that in every other city, rents just go up because just, the employers get a larger catchment of employees to choose from, and travel costs reduce significantly as well as time. So JLL thinks that the rents will go up to 100 rupees in the next 4 years. We think that will be slightly lower, but if you ask me, I think the rents are going to spike up after the sort of metro comes up suddenly, like we saw in Whitefield in Bangalore, and then have a steady sort of increase. So in that way, we are in a great market with hardly any supply, very low vacancy, metro coming up, and so on. This is the way the tenancies are spread across the 6 floors, advertised across various floors. You've got the Japanese MNC, Concentrix on 2 floors, the Fortune 500 healthcare company. We can't use their names and brands because we didn't get permission from them to use that in the prospectus. Right. Sustainability is something I sort of spoke about, and the structure and people I already spoke about. So before I finish and open it up to questions, let me quickly also talk about a question all of you will have on the tax, how the tax sort of plays out. So if I take the 9% pre-tax yield, which every investor will get, like I mentioned, if you invest 10 lakhs, you get 90,000 rupees payable quarterly. That 9%, if you're in the highest tax bracket, which is if you have total income above 5 crores, then you end up paying almost, usually 42%, including cess. But here, the 9 becomes 7% post-tax. That's only a leakage of around 22, 23%. And if you are in the lowest tax bracket, which today is a private limited company at 25%, then your 9% becomes 7.8% post-tax. So a post-tax return of 7 to 7.8% is really, really high in today's market. And 7.8 goes up to 7.9, 8.1, and so on as rents go up by 5% every year as per contract. So that in a nutshell is why we love this asset, why we are investing in this asset, and we are bringing it in front of you. The IPO opens on 21st of July for 5 days. It will close on the 25th of July, and then it's a fairly regulated sort of process after that. The listing will happen around the first week of August, around the 3rd of August, right? So with that, I will end my sort of presentation on this opportunity and open it up to questions. So let me just open. Yeah. There doesn't seem to be too many questions right now. I apologize if I was a little quick in the presentation, but if you'd like to know anything else, I'd be happy to answer. But as of now, we don't have any questions. So if there are no questions, then we will end this webinar. And if you think of any other questions later on, then you could sort of email us or the investment banker, Kotak, any given point of time, and we'd be happy to answer. Nikunj, anything from your side?
I think pretty much everything is covered, Kunal.
Right. Okay. Great. So thank you very much, and we hope to sort of speak again if you have any questions. Thank you.
Thank you everyone for joining me.
Kindly like, subscribe and hit the bell for more such videos.